Well, with everything else going on, I also wanted to take a look at our canola market this morning. We did have that big drop in the soybean trade, and of course, there has been a weakness in the soy oil markets. Let's see what canola is doing today. It is under pressure as well. The May contract is now down $6.40 in Canadian money, and that is priced at $453.30 per metric ton. July down $6.30 at $461.60. So yeah, a lot of pressure in all of these oil markets. For example, the soybean, soy oil, and now canola as well. Also, let's take a look at how our grain markets are doing this morning. On the corn, we are currently down, but not as low as we had been at the overnight trade in early morning. May down 5 3/4 now at $3.70 1/4. That's about 3.5 cents off of our earlier low. If we go to December, we're down 6 at $3.75 1/2. If we look at our soybean trade, currently have the May contract down 22.5 cents. We're now at 8.68 3/4. And we have the August down 21.5, September 19.5 lower. We have November down 19 3/4 right now. One bright spot, though, when it comes to soybeans, we actually had an overnight sale of soybeans. Now that kind of gets lost in all the other commotion going on today. So what we had was a sale announced by USDA of 123,500 tons of soybeans to unknown destinations for the old crop marketing year. And yet maybe it's keeping soybeans from dropping even further. Who knows? The soy oil and soy meal trade, we can show that as well. We were talking about that earlier. So let's go ahead and bring up the soy components here. We have the soy meal, currently down $8.30 at $296.80 per ton here on the soy meal trade. And on the soy oil market that we were talking about, we have the May down 103 points at $27.72 per hundredweight. Brian Hoops joins us right now. He's with Midwest Market Solutions out there in Springfield, Missouri. And what an eventful day we have had here so far. Some of the grain markets trying to come off of their earlier lows this morning, but still it's an uphill battle today.
Yeah, it's a real ugly day. You know, I've been doing this a long time, can only remember crude oil being below $30 a barrel one other time, Marlon. And, you know, we are recovering off of those lows so far, but it's a long trading session. The markets here are dealing with some major changing fundamentals. And with the crude oil being down as sharp as it was overnight and the stock market being locked limit down, you know, it's a wonder the grains aren't down harder than what they are. They don't have a lot of positive news or supports to give us any strength in the markets today. So we are seeing quite a bit of weakness in the corn and soybeans, wheat as well, and just not that much good to say out there. The cattle market also, you know, sharply lower, but at least we're starting to trade again after being limit down early in the trading session.
Well, and the same thing is happening here in the crude oil that you were talking about. You have the April now down $7.70 at $33.58 per barrel. But it's about $7 off of its earlier overnight lows. So yeah, we're gaining back about half of what we lost in the crude oil. Also in the cattle that you mentioned, we'll get to that in a minute here. But from what I hear, this is really putting the squeeze on the ethanol prices and some worry about its connection, of course, to the corn as well this morning.
You have to be concerned about this because everything is kind of connected. A lot of the large speculative community trade, the large fund traders, if they are rebalancing some of their portfolios and selling a lot of crude oil contracts, they also have to rebalance some of their grain contracts, livestock as well. And of course, when we see sharply lower stock market, sharply lower crude oil, that just gives way to a lot of selling in some of these other commodities. And we're seeing just really a host of selling across the board in all these commodities and really not that closely tied to any real supply and demand fundamentals for corn and soybeans. It's more of a liquidation type selling from all these other markets. But, you know, if you look at just the pure supply and demand fundamentals, corn and soybeans really don't need to be trading higher. They need to be working lower. We got to find price levels that stimulate better demand. You know, there's some reports over the weekend that China is trying to buy some DDGs. They're trying to buy some sorghum products from the United States, maybe some spring wheat. And so they're hinting that they're trying to buy some products, but two things they're not looking to buy is U.S. corn or U.S. soybeans, as they have a lot of South American supplies to draw off of.
All right, let's take a look at the livestock trade in a moment. We're talking with Brian Hoops, and we'll be back after this. All All right, currently the Dow is down about 1,586 points, so starting to slide a little bit more again. Remember, at the open this morning on the daytime session, it did pause. It tripped that circuit breaker when it went down 7%. Halted for about 15 minutes, and it's back to trading, but it's just really under a lot of pressure today. We talked about the crude oil being down. We had the cattle market on live cattle and feeder cattle all opening limit down this morning. And then they started trading, and look at them now. We have April live cattle down $1.70 at 104.05, June down 188 at 98.15, and August through December are over $2 lower. Now, on the feeder cattle market, remember, we opened everything $4.50 lower on the open this morning. We have March now down 347, April down 378, and May down 415 at 127. So they came off of the lows. Now they're starting to sag a little bit once again. On the lean hog market, here we go. We had the April contract $1.85 lower at 64.08, May down $1.50 at 69.88, June down 170. So just like in the cattle, they bounced a little bit about an hour after the open. Now they're starting to sag a second time. All right, let's go back to Brian Hoops. Brian, what do you make of the action you're seeing in livestock so far? Would this be possible that it may be putting a base in the market for the time being with a crash like this?
Yeah, anything's possible here. You know, we opened the cattle limit down, live and feeders both limit down. They're starting to recover, but it's, you know, continues to mirror that action in the stock market. We were sharply lower. Now we're seeing a little bit of movement back to the upside and some active trade. But one thing in the cattle market, we're seeing a little bit of bull spreading where October is losing ground to some of those spring contracts. April and June are gaining against the fall contracts, and that's not been the case on most of this descent. A lot of the selling pressure has come in the front months, a lot of bear spreading. Today we're seeing a little bit hints at early bull spreading in this market, so that's a sign that maybe this market is trying to find that bottom. That's something that you can watch real closely to give you an indication if this market is actually trying to bottom. The bull spreads will start working first.
All right, thanks for talking with us, Brian. Brian Hoops of Midwest Market Solutions in Springfield, Missouri. What a day. But boy, we're glad our viewers are here joining us today. We're trying to keep everybody abreast of the up-to-the-minute news.
I know they appreciate the insight you're bringing to the table for them, so thanks, Marlon.
Yep.